32%, and that's because of, well, we had some outliers over here. June 20th, it opened up 13%, but gained another 195%, almost 200% from the opening price. Okay. So the range here is really high, from 0 to almost 200%. It's a volatile stock, very, very volatile, very, it could be, it could be very liquid, right? Very liquid after the open. What about to the low of the day? So let's say we open a higher. When it goes lower, does it typically, is it illiquid, or is it, or is there strength and it doesn't go? Does it close that gap? Let's take a look at that. So this is from the open price to the low of the day. Okay, so you could see here, from the open price to the low was down 24%, almost 25%, 26% on this day. So this, it's just indicating that the stock itself is a very illiquid stock that moves around a lot. You can look at these percentages are all over the place. So this moves around a lot. On average, the move from the open to the low was down 15.6%. Okay. So looking at those averages, it tended to be more illiquid to the upside than to the downside. The moves to the upside on average were more violent than the moves to the downside, if we measure it from the open to the, from the high of the day to the low of the day. And let's take a look over here. If we look at these max moves, you could see here the median move. Well, the median move to the upside was 2.5%. The median move to the downside was 17.2%. But these moves, the extreme ones, the extreme move to the upside was way bigger than the extreme move to the downside, 195% versus 26.5%. Obviously, a stock can't be down more than 100%. So that's given us, a kind of picture of the distribution of returns after the open.
Hey, D?
What? Yeah.
We had a little freezing in the system. I don't know exactly when it froze, but could you go back to how you got to this page, just so people are aware?
So to the pre-market page, you're saying, or
yeah, how you got through to this workflow? People are asking.
Okay. So when you start out from the home page, right? You go to stocks, click on pre-market trading. You're going to end up on the pre-market report. You have these in the pre-market report. You have a table with most active stocks in the pre-market, largest gainers, largest decliners, and when you click on the row with the symbol, okay, and ALUR over here, click on that row, and that will pop up analytics for that symbol. So you see I clicked on the row ALUR.
Perfect.
And then that table for ALUR will pop up. Once you're on that ALUR analytics, stock analytic, you have these different tabs up here. Since we're looking at a stock that's up in a pre-market, I clicked on this gap up historical moves. So now that we're on this page, we went over, the opening gap. the open to high, open to low. And here we're looking at the open to the close. So what did it end? What did the stock tend to do by the close of the day? So it opens higher. You could see large open. Where does it close? Does it close higher from that open? Is that opening print, right? We're higher. Does the stock close higher from that open or lower from that opening price? So that's the drift from the open to the close. So here we could see that we have, on average, the return was positive 2.8%. However, only 25% of the observations were higher, while 75% were lower. And that here, when we look at that data, we could see that, yes, there's a huge right here, very big outlier, 116%. It was up on a day. There is another really big one, up 40% from the opening price. However, 75% of those 75% of those observations, the stock did drift lower from that opening price. Okay. Lastly, what tends to happen the following days? Let's say there's a big, liquidity event, stock gaps up, moves around. How does it, behave following that day? Let's say the next day, 2 days, 3 days, 2 weeks. So here we have the stats following that closing price, of that day. What happens the next day? What happens in the 2-day period, 3-day, 1 week, and 2 weeks? So we could see here that, the average returns up next day, but not as much day 2. And then 2 weeks following, on average loses 13%, with 58% of the observations lower, 42% higher, showing that, that it gives back some of those gains. It tends to give back some of those gains after a 2-week period, but not fully, because we could see here the average move, for the day it was up 32%. So giving back some of those gains, but not total. So it tended to hold on to a lot of those gains in the morning. So let's take a look at a tool where if we just wanted to check on a stock that may not be on this list, today, because we're just interested to know, from a historical perspective, how something moves. And we'll use SPY in our analysis. So I'm going to type in SPY here. And we come to this SPY page. Now that we're on SPY, we have this menu on the left-hand side. Let's click on Tools. And under Tools, there's an item called Events. We're going to click on Events, and we come to this page that we can perform our analysis. So I'm going to close this menu really quickly to expand the screen. And we have over here a way to select the type of event. Since we're looking at opening gaps, let's look at, we'll look at a negative opening gap. So here, price-driven events, largest negative opening gaps. I'm going to select this. Okay, so it's going to look at the 12 largest opening gaps. I think we go back like 3 years. I'm going to reload that. And now we get a similar table. I'm going to expand this day of event. Let's expand this. And we see the opening gap moves for SPY, which is the S&P 500 ETF. we could see here the large opening gap moves. So that's SPYs, and we don't have 20, 30, percent moves at the open here. A larger one you could see is like a 4% move, 2% move. So on average, if we took the biggest 12 moves in the last 3 years, it looks like the average gap move down was 2%. On the day, it also looks like the average loss was 2%. So it just shows that it didn't tend to close that gap, right? It tended on those down days, it tended to not close that gap. If we look at from the opening to the high, opening to the low, we could see it's very similar, up on average 1.2% from the opening to the high, down 1.1% to the low. So there's volatility there, about another 1% in either direction on the day, a little bit more than 1%. From the open to the close, it's 50-50. So half the time it was up, half the time it was lower. On average, the returns were 0. So we could see here, these are the returns. We had one big one here, up 4.7%. So that over here on October 13th, the market was down 2%, but it rallied 4.7% from that open to the close. You could see it finished up 2.6%. So there was one time that it actually opened lower and not only closed that gap, because closing the gap, the return would be 0 on the day. It was actually up 2.6%. So quickly, what happened the days following? We have this big liquidity event. What happens the days following? So here we have moving out 1 day, 2 day, 3 day, 1 week, and 2 weeks. And one thing just caught my eye is that on a 2-week period, on average, SPY gained 2.2% with positive moves 82% of the time. Okay, so it tended to close that gap or recover those losses over a 2-week period. The market did, right? So it not right away, it took a while, but over a 2-week period, we could see here that in these 12 cases, the average loss was 2% on that day, the opening, but after the close of that day, over the next 2 weeks, it tended to recover those losses on average. Okay, so I'm going to stop right there because we kind of went over, 2 tools.
Hey, that was awesome, D. Thank you so much. This is the last webinar of the week, and we've scheduled work stoppage this weekend, correct? The site's going to be down for.
Yeah, so on Sunday between 4 a.m. and 10 a.m. Eastern, the site will be down because we have a scheduled maintenance. We're doing upgrades, so we have to take it down while we do those upgrades. So that will be this Sunday. We're going to try to do it early in the morning, so we have it up later in the day. But I think that will be between 4 a.m. and 10 a.m. Eastern time.
All right. Great job as always, D. You have a great weekend. Chameleons have a great weekend as well, and we will see you on Monday. Thanks, D.
Thanks, everyone. Hope to see you guys Monday. Have a great weekend.
All right. Have a great weekend, D. All right, everyone. I'm going to put the disclaimer up one more time, just so everyone's aware. Neither Market Chameleon, Dimitri, ourselves are registered investment advisors or a broker dealer. If you're searching for investment advice, please reach out to a licensed professional. This show you just viewed is for informational purposes only concerning Market Chameleon tools and products. Everyone have a great weekend.